This month we had over 500 clients join us in Melbourne and Sydney for our quarterly tax briefing. There was certainly plenty to discuss, with the ATO actively engaging in corporate Australia through its streamlined assurance review program, the OECD considering the digitalisation of the global economy. We've seen a number of court cases and also had some state budgets handed down.
So the ATO has commenced or already completed 2/3 of the Streamlined Assurance Review program, which focuses on the top 1,000 taxpayers in corporate Australia. As a consequence, we are seeing the ATO's key areas of focus are transfer pricing, particularly related party financing, with almost 45% of taxpayers currently receiving low assurance or red flags. In addition, other areas of focus include research and development, MEC and consolidation, and thin capitalisation. Across the board, we are seeing taxpayers that get the best outcomes are those that prepare early and prepare for the review on the basis that it's an assurance-based review, not a traditional risk review.
The current tax environment is complex, it's connected, more transparent than ever, and disrupted by political shifts and emerging technologies. The ATO's focus and aspirations under their corporate plan for 2024 means that they're focusing on a few key areas. One, looking at building confidence and trust in the community, and also using data as a strategic asset. With increased disclosures, we're seeing these come through in a few different ways and in a few key areas. Controlled foreign companies is one particular area with 18 new disclosures in the 2019 forms, and also hybrid mismatches with 28 new disclosures. Another key focus and shift is the expansion of the Reportable Tax Position Schedule, which, when first introduced back in 2012, only was applicable to the top 100 large and multinational groups, whereas now is being applied to many more taxpayers and is essentially becoming a standard schedule to the tax return. This schedule really asks taxpayers to consider and disclose their most material and most contestable tax positions. Considering the increased burden on taxpayers and the potential for increased and significant penalties to apply, it is important that you are able to substantiate your positions in your income tax return.
Since we last met, we've had a case consider some of the key issues regarding domicile and residency. With a significant increase in disputes in this area, it shows the ATO's renewed focus for some cornerstone tax issues. With the federal election in May, there's been limited legislative developments. The government's tax relief for hard-working Australians and the expansion of small asset write-offs for small to medium businesses being key measures to receive royal assent. The ATO continues to be data-focused, with the expansion of its data matching program to cover both cryptocurrency and insurance for lifestyle assets, with the latter being used to profile a taxpayer's wealth before the commencement of any audit activity. We've also had a report from the OECD on progress on the BEPS agenda, positive reinforcement and a renewed focus in solving some of the key issues in taxation of the digital economy. Finally, we've seen some key changes come out of the state budgets, with the expansion of land taxes and changes to Victorian reconstruction relief. All in all, a very busy quarter.
Hopefully that gave you a good overview of some of the things we discussed. If you have any questions, please feel free to get in touch via the email address below, and we certainly hope to see you at a PwC tax event soon.